Morning, everyone. Thanks to IFA for this wonderful program being organized. And thanks for inviting us over here to be a knowledge partner also. My endeavor over the next 45 minutes or so would be to set the context of what has been happening in the litigation space or the dispute space. How has the dispute framework been, functioning? And what is the alternative dispute framework and how is it functioning? The new issues which are pitchforking for the dispute resolution framework to be handling. And what could we be doing to improve the dispute resolution? This is how I'm proposing to go about this the entire discussion. Let's start with what's happening on the ground. What is the action happening on the ground? On one side, every day's newspaper carries a significant action from the government, be it a survey or a search that we have been reading, at least in the last, about in a year's time. There has been a very significant uptick on the action on the ground that we see every day. And this is agnostic of industry. There are several industries. It is manufacturing, gaming, fintech, and there are specific Chinese companies' actions. All of this have been happening, as we see. And statistics say that this has gone up so significantly. 5 years back, the survey actions, whatever it was then, to now is almost double. And to give you some statistics, it was less than 5,000 surveys in 2015. It has gone up to something like 14,000 surveys in 2020. In 5 years' time, the numbers have gone up so much. As far as searches are concerned, the number of searches were around 2,700 searches in 2015, and that has gone up to about 4,200 searches now as we speak. So in all this, you see so much of a significant action. Now, why this becomes as an important trend is, in the past, this instrument of search and survey was targeted towards unorganized sector in terms of bringing out, unaccounted money. But as you see today, it is significantly focused on corporate sector, which is very organized and generally very well compliant. And the issues at the end of the search and survey operations, you see what comes for discussion are issues which you would probably see in any regular assessments. That's a surprising trend that you see. And what it also does is it sets up a certain amount of paranoia amongst the taxpayers, especially if it is very well organized, especially if it's multinational. What happens is that there is a sense of despondency when it comes to these kind of actions. And then it becomes very reactive. So what's happening today as we speak is there are a lot of cases where clients reach out to us asking for some sort of a workshop in terms of laying out what happens during the course of a survey, what are your rights and obligations, what happens in a search. At the end of the search, what do you do? What are the next immediate steps that needs to be done? All of this, they want to understand so that they are better prepared. They also want to nominate people who will be anchoring some of the, tax office discussions, media management, also policies around litigation. Like, for instance, if your bank account is attached at the end of the search, am I going to challenge this in a court of law or not, is a point of view that you should have ahead of time, not be scrambling at the time when the attachments have happened. There are times when you have to take these policy calls, right? So this is the action that we see on the ground in terms of the search and seizure and all that. The second is the interagency coordination. When you have a direct tax search, immediately a DRI comes in later, or there is a GST action and then income tax goes on. So there is a significant amount of interagency coordination, passing of on information. There used to be initially an information sharing memorandum, which also got, I think, refreshed in July 2020. It is now an automatic information exchange, is what I understand, that there is a mandate of information being shared between agencies. This is the next important trend that we have also seen. The third part is the very recent thing that you would have seen just about a week ago, the DGGI coming out with a news report saying that they are setting up 5 digital forensic labs. And this is in partnership with National University for Forensic Science, which was established by an act of parliament by the government of India as an institute of national importance. The point that why this is important is that the government understand they have a lot of sources from which they collect data. That is on one side. Also, on these actions that they undertake, there are a lot of data that comes up. So they are now deepening their forensic capability, because today the way of corporate life is through systems and data. So data becomes so crucial for them to analyze, digest, and make sense of the data, so that they can come back to you with a very targeted approach on in terms of the issues that they want to see, whether it is, and this will again be passed between agencies. So you will see, if the organization is very siloed in its approach, in its policies, in its positions that it takes in terms of different issues, then you will have trouble, because the government is becoming very, very coordinated. So that's the other thing that we are seeing on this side. And then we have our regular issues around faceless assessments and reassessments galore. GST audits and investigations have started. And I understand from my colleagues in GST, there is a manual of about 140 pages which is put out for guidance of the officers who come in, and they are very clear on what they need to see. They are very well prepared in terms of what they want to analyze, etc. So again, shows government is getting their act pretty significantly organized. And we also see on the other side plethora of reopening notices, which is not a good sign clearly, and especially with the reopening timelines being so far pushed back. 10 years is an unbelievably long period of time, even for maintenance of records. And if your litigation is to start, for instance, an assessment is to start going back 10 years, and then for it to go through the entire chain of litigation, a person's career will end. He will start as an associate, perhaps retire and go, and you will still be litigating, right? So that is the unfortunate part that we are seeing. And there is a significant dilution which happened on reopening also. Initially, in the first speech of the finance minister, it was coming out as if it will be for the serious cases that the 10-year criteria will apply, and that otherwise it will be a truncated 3-year period. But then subsequent dilutions happened through amendments. Today, it's far easier to reopen, pretty much anything going back 10 years. So that is the unfortunate state of affairs that in which we are, especially when the dispute resolution time frame is so slow. The other thing is the advent of the GAR panel. The general anti-avoidance rules, as you all know, are operational. The GAR panel has also been set up. It is set up in Delhi. It comprises of 3 members. One is the former Justice Mr. Chandrasekhar, Delhi High Court, Mr. Rajat Bansal, who is also going to be on the panel in the next panel, and also one Mr. Nigam Nugahalli, who is a National Law University professor from Bangalore, because the law requires the composition of the GAR panel to be 1 revenue member, 1 scholar, and a judge, and that's how they've got the panel. The notices have started coming. The first orders have been passed. That order has also been challenged in the Telangana High Court. One of the orders have been challenged, but it is not yet a large trend. I wouldn't say that we are receiving notices by the day, but notices are coming, and there is no, again, a discernible trend for these notices. It is coming on areas where I would have otherwise thought transfer pricing should apply, but GAR notices are coming on those areas, which is going to be a new area of litigation entirely. Secondly, on recharacterization and combining transactions, disregarding steps, these kind of notices come. These are driven on M&A transactions. And again, this is not just for corporate entities, for non-corporate entities also, we have seen notices being issued. So as a trend, if you see, I can't see a trend yet because the notices are not that many, but it is coming in different spheres actually. And this is going to be a very large area of dispute. The unfortunate problem here, I want to draw a parallel from what happened in transfer pricing. Today, you see so many transfer pricing disputes for one very important reason. Initially, the threshold for taking cases was very, very low. If you remember, it used to be just 5 crores for picking up transactions. That was a bad trend. Now having a 3 crore threshold for GAR issues is also a bad trend. 3 crores is nothing. So if beyond 3 crores transactions can be examined for GAR, it will open up a Pandora's box. You will be flooded with cases on this. Though the threshold, if a new regime is coming in, the threshold should be pretty high to start with. The regime should be allowed to set up. settle in itself. And then the threshold can be lowered if the experience suggests that it should be lowered. But the way they have gone about the 3 crore threshold is pretty small. So this is the heightened action on the ground that you see. Significant, the government is getting its act together, and I do not see the corresponding action of being well prepared from the corporate world, and that is a worrying trend. And we all the time see documentations not being available with the taxpayer. They are struggling to put together data, especially in faceless assessment. When you have plethora of questions coming in, we are finding people, that the corporate world clearly not ready and not prepared at all. So that's the worrying trend. So with that, we will go to the dispute resolution framework. What is happening in the framework there? Faceless appeals, over 5 lakh cases are pending. Faceless appeals are not happening, as you all know. Some here, 1 or 2 cases here and there are coming up, but otherwise we don't see any action whatsoever. So this has halted all issues at the CIT appeals level. If there are, transfer pricing adjustment, of course, we have the option of going through the dispute resolution panel. That is what we are doing anyway in 90% of the cases. But otherwise, the whole the entire appeal system is clogged. Income tax appellate tribunal takes at least 3 years in smaller jurisdictions, more than 4 or 5 years in larger jurisdictions. As we speak, 37,000 cases are pending across the country before the various tribunals. And by some measure, what we also saw, the other interesting trend, I analyzed it at the Supreme Court, High Court, tribunal level. Only at the tribunal level currently, the number of cases that are getting instituted is less than the number of cases getting disposed of. In every other case, it's the other way around. The number of disposals given by Supreme Court or High Court is lower than the new cases which are getting filed. And is this trend in the tribunal because of the tribunal's way of functioning? The answer is no. Because it is because of the first point. There is no inflow from CIT appeals to tribunal. So the number of cases getting instituted at the tribunal is not going up. It is only the DRP mechanism or in CIT appeals where there is a face-to-face CIT appeals, where international tax cases, those kind of cases are going up. So otherwise, there is no inflow in the tribunal. And therefore, the number of cases getting instituted is lower than the disposal rate. If this trend continues within the next, excuse me, can you stop? If this trend continues in the next about 1.5 years, the entire pile of inventory of cases in the tribunal substantially will come down. But that trend should not continue, because then we are not disposing matters from CIT appeals. That is the other problem. High Court, you again know where we stand in terms of TCA, 5 to 7 years time. Writ petitions also taking enormous time, depends on. And again, what is worrying for me is, even on 148 notices, the High Court's asking questions of whether is there an alternative remedy or not. Supreme Court has laid down this proposition that reopening notices can be challenged, starting from Constitution Bench decision to even as recently as about 2-3 weeks back. They have disposed of, again saying that alternative remedy is not a bar. If there is a natural justice violation, if there is a jurisdictional issue, you can challenge it. Yet the High Courts in sporadic instances keep asking these questions, which is a worrying trend. Supreme Court, about a decade of wait there. Recently, I read a ruling called Mansukh Dying. Okay, it is a partnership case ruling, and I will not get into the case. I was stunned with the assessment year involved in that case. It was assessment year 93-94. The verdict being delivered in November 2022. If that is the dispute resolution mechanism, we are in big trouble. Right now, AAR and BAR, Authority for Advance Ruling, as started off with a lot of fanfare. In 6 months' time, disposals were supposed to come. It was supposed to deal with proposed transaction or transactions already undertaken. Unless that transaction is scrutinized by the tax office, it becomes a prohibition. Otherwise, you are allowed to go and get a verdict in 6 months' time. Over time, it became almost 4 years, 5 years. And one of the key reasons why this became like that is the way it was set up. It was set up to be manned by Supreme Court judge or former High Court judge. And the Supreme Court, High Court judges were not available to be filled. So the institution's functioning significantly got depleted. And now that became the reason for the institution to be abolished. So AAR is not functional. AAR has become Board of Advance Ruling. All the pending matters in AAR are moving to the Board of Advance Ruling, which is a non-binding ruling and a ruling given by revenue authorities, contrary to what it was and supposed to be a neutral body. So it's a massive shift which has happened. And in my view, it is a clearly a retrograde step. And the reason why I say this is simply that you don't want to go and take rulings on a non-binding ruling from revenue authorities. You would rather want a neutral body. So one of the things that could have been done here, and I'm slightly sort of mixing up what could be done, which is a later slide, but I thought it's more appropriate to take it here, is that today you have an exceedingly otherwise well-functioning tribunal, a system where the judges know what they are talking of. Generally, transfer pricing and international tax matters are well known to them. So one way we could have solved this issue is make the AAR, which is currently they originally supposed to have judges, they could have borrowed members from the tribunal, moved them to the AAR, made that functional. Again, the independence would have remained, and we have people who have understood international tax coming into AAR, or fuse AAR into tribunal. The tribunal can give advance ruling as well as dispose of matters which are in dispute. So there may have been challenges or issues, but these are good suggestions which should be explored in my view, because with the creaking dispute resolution mechanism, you need alternative dispute mechanisms. Advance ruling is a great dispute mechanism that should have been preserved and augmented, should not have become bar. Now, the fact that it became bar has been constitutionally challenged in the Delhi High Court and in Madras High Court, because people as taxpayers are saying, I went with the promise that this is going to be an independent body which will give me a ruling which is binding. Now you're moving me after so many years to a bar, and that has been challenged. So that's stuck there. So nothing is moving again on that. Settlement commission in income tax is abolished. There is just an interim board to settle, which are existing matters for various reasons which we can't talk about in a conference. At the same time, indirect tax settlement commission, apparently they have attempted strengthening it by including few more members on the board. But the problem, and if you see the problem that they have, 16,000 show cause notice with 63,000 crores in customs, service tax 2 lakh show cause notices with 1.2 lakh crore issues pending. So they therefore want to enhance this settlement commission. But they have also brought in a rule in this budget that within 9 months, extendable by 3 months, if the settlement commission does not give out a verdict, the case will go back to a show cause notice stage and back to the assessing officer. So that is not something which anyone would want, because if it is for no fault of theirs, even for the member not being there, if the commission doesn't function, you go back to the show cause notice stage, nobody will go to this forum. So this is not again an effective forum. No administrative settlement possible at all. And I think we will touch upon it at a later stage, but that is something which is the current situation. And GST tribunal is yet to be set up. And we believe there is a tsunami of cases waiting in the GST. Every taxpayer, one company may have multiple registration and everything is a taxpayer. And the issues may erupt in every jurisdiction. So in every jurisdiction, you will be filing tribunal appeals. So we did a math within our firm, and the number of taxpayers within our client universe itself is staggering. When I say taxpayers based on registration, it's a staggering number. So if the issues are to arise there, it is going to be really, really a massive amount of disputes. And at the same time, because GST is yet to be set up, it poses us an opportunity to get it right. To modernize it, to bring in digital, ways of dealing with it is possibly possible in GST tribunal. With this, I'll quickly go to the alternative dispute framework on how this is functioning. We have a separate panel discussion set up for this, but I just thought a high-level flavor will be useful. Mutual agreement procedure under the tax treaty has been a great way of resolving disputes when it comes to cross-border. And especially if there are transfer pricing adjustments, or if it is an international tax matter, you are able to resolve this. This is under the treaty law. And the law there is notwithstanding your domestic law remedy, meaning you may be fighting a matter in the tribunal, yet you may be going into a mutual agreement procedure trying to resolve this. And under the law, you are allowed to choose best of the outcomes. If you don't like MAP, you can walk away. You can take the domestic law remedy. But if the MAP outcome is great, then you withdraw the domestic law remedy of an appeal. This is the framework. And it's been functioning well. If you see the global experience, they have achieved 53% of cases where applications are filed. Complete settlement, which means that you are not out of pocket. Between the two jurisdictions, they decide where the tax is to be paid and where the credit is to be given. So that has worked well globally, 53%. The inventory in India, if you were to look at, about 1,000 odd cases which were pending at the end of 2019, has taken approximately about 34 months for resolution. And India's best endeavor commitment globally is that we will attempt to solve all this in 24 months. But we are a little away, but 34 months is still a good amount which is available there. The other thing is, we have also found binary issues are hard to resolve under the treaty. Whether it is royalty or not, whether there's a PE or not, are not easy issues because each side will have a point of view. And that doesn't get resolved that easily. But we find that attribution issues are therefore far more easier to settle. And if you see 83% of the inventory of MAP matters pertain to attribution issues, which can imminently be settled. And we have used this forum very tactically also. There are certain treaties like US, UK, Sweden, Denmark. These are treaties which allow suspension of collection of taxes if you are filing an MAP. So which means if there is a dispute involving this country and if we file an MAP, you just give a bank guarantee and get the entire dispute suspended, tax collection suspended, and you can still try your domestic law recourse. And if that becomes successful, you don't need the MAP. That's one approach which some companies have attempted. Equally, the other interesting thing which emerges is, especially if there are transfer pricing disputes, let's say I'm rendering services to US, UK, and few other countries. And my model is set up in the same manner. My functions are set up in the same manner. So I take India, US alone into an MAP and the MAP outcome is achieved. You see tribunals applying this MAP outcome as a persuasive value for other segments, which means UK and the rest of the world segments are also getting settled using the MAP outcome. Since the FAR analysis is the same and the entire setup is the same, tribunals are willing to do this. So that also become a strategic importance, that I resolve one segment under one treaty, rest is resolved through domestic law recourse. So those strategies also play out. The challenges do also remain. For example, penal consequences are not resolved under the MAP because that is a domestic law provision. So you will still have the exposure of penalty which you will deal with in the domestic law. That is one issue. CBDT has also come up with a clear guidance of what they want to do, what they don't want to do, etc. Though the treaty is set up saying that domestic law recourses are available and you can choose the best, the CBDT's position is that if tribunal gives a verdict, AR gives a verdict, we will take that as our position. So we are not going to change that position because that's the highest fact-finding authority. That's a tribunal's finding. We can conclude the MAP as either resolved under the domestic law remedy, or you can give a correlative relief. Our position remains the same. So that becomes an important issue. So if you entirely proceed with the case in the tribunal and you get a negative verdict, unfortunately your MAP won't work, at least from India's standpoint. So we have to be very tactical about this. There have been cases where we have picked 1 year to try domestic law recourse. Rest of the years we have kept it under MAP. So all those strategic thinking around dispute resolution comes up. The moment you understand this framework, you can straddle both these frameworks and try to use those frameworks to the best of your advantage. Similarly, there are several areas where the MAP authorities won't proceed. For example, they believe a US single member LLC is not entitled to treaty. So we will not even enter into negotiation. So those kind of issues still remain. Lastly, will it always mean that under an MAP, we will find a resolution? The answer may be not the case, right? If, for example, if there is a PE dispute or royalty dispute and both parties don't agree, despite all the discussions, where does it lead to? If you see the OECD Model Convention or the UN Model Convention, it prescribes a mandatory arbitration. The two countries can take it to an arbitrator who will arbitrate. Whereas India's treaties don't have that clauses, and India does not want it because of they have concerns around sovereignty, and therefore this is where it is. So MAP has been extremely useful. At the same time, there are limitations. You'll have to strategically, tactfully use this. That's on MAP. Quickly moving on, we'll touch the APA. It has been a phenomenal success, on an overall basis, for the reason that the Indian authorities have shown commendable amount of maturity in understanding business models. They have been very open and rational in having discussions. And overall, the taxpayer community, the consulting world has gained significant trust in the program. And over the last many years, about 450 odd cases have been resolved, or where agreements have been entered into. At the same time, because of the COVID, site visits were not possible. Suddenly, there is a pileup of number of cases. Apparently, some 700 applications are pending. And last year, they had signed only 62 applications, 62 agreements. So, which means at this rate, it will take enormous number of years to clear APAs. So, a body which functions well has to be deepened and, be given to the taxpayers to be availed, so that your dispute resolution mechanism will work. Any APA, you can get certainty for 5 years forward, 4 years backward. So 9-year period certainty is something which is available, and therefore it is a great tool to look at. And also, what I believe are difficult ones to solve in tribunal are getting solved here. For example, we can always argue till cows go home as to in a distribution whether I carry the risks or not, whether I'm a limited risk distributor or full risk distributor, whether I'm a contract manufacturer or an entrepreneur. These, or am I low end or high end? These are debates which will never be easily resolved in tribunal. But we are able to achieve reasonable amount of certainty under the APA program. Similarly, functional profiles across the year where there are changes. For example, in one, up to a point in time, you may have been an entrepreneur, but you have shifted your characterization later on. Those kind of issues are also something which we have been able to deal with. Interesting issues around deemed international transaction. Can you cover it? There are ways to cover it. That's possible. We have that. It's not achieved yet, but there are things which are progressing. Similarly, AMP as international transaction. It's a very interesting thing. There are companies, AMP is that you are aware that brand issue, which is dominant and present currently before the Supreme Court. There are companies which will not admit this to be an international transaction. They will fight it, and till now, up to the high courts, it is in favor. Now, so matters are before Supreme Court. There are companies which are comfortable admitting this to be an international transaction within the framework of APA, and those kind of cases are also being seen. So the flexibility that comes in this is phenomenal. And also there are people who plan this. For example, you have a MSS company, which is a market support company on the ground, and there is a global parent, and the master service the support services, marketing support services are being rendered by the Indian company to the global parent. Typically, you will have a PE issue, right, for the foreign company. That's something which you will all look at. So more often than not, market support companies go for an APA program, accept a certain arm's length price, which will mitigate the permanent establishment risk for the foreign enterprise. That is also the other plan that companies, look at. So all of these have encouraged us to look at APA as a forum, which is a good forum for resolution of or avoidance of these disputes. So with that, I will just move on to the next segment. What are the issues which are in the cusp of resolution? Let's look at it. One is the secondment issue before the Supreme Court. Concentrics, sorry, not the secondment, it's wrongly written here. My bad. It is the withholding tax rate, 5% withholding tax rate being applicable through a mutual MFN clause, most favored nation clause under the tax treaty. Whether a 5% rate is applicable for dividends being upstreamed through certain treaties. That matter has been heard in the Supreme Court. Orders are reserved. Anytime, the next 1 or 2 months, the orders will come. That's a big one, because it does not only, it is going to set a path for future of treaties, the way we understand treaties, the way we understand MFN clauses. It's a big dispute which is likely to be resolved. And at the same time, the other secondment issue is the NOS issue. So I sort of mixed up the caption there. NOAS issue is the Northern Operating ruling, which came in the GST side, and holding the manpower supply, this to be a manpower supply. Any secondment arrangement should be construed as only a manpower supply. But if you read the ruling, there are obviously conflicting parts to the ruling. So companies are trying to take a clear position on whether this is a manpower supply under GST. What does it mean then under the income tax law? Whether can I then say it's only a manpower supply, therefore there can't be a service PE issue or a fixed place PE issue? Is that an arguable position or not? These are issues which are being looked at. That will also get settled soon enough. The other thing is the AMP issue, which I told you about, which is pending before the Supreme Court, anytime, which can be resolved maybe in the next 1 year or so. But the GST issues are just starting on that. Because there is an AMP dispute going on and the position taken by the income tax department is known to the GST, GST takes a view, okay, there is a service of building brand that you are rendering to your global parent. That's the AMP issue dispute in the income tax. If there is a service, there is a reverse charge of tax that you will have to pay from a GST standpoint. That is now starting to brew in a bigger way. Similarly, the issue before the special bench in Bombay, which has actually just been heard, orders are reserved, or on the issue of whether DDT, which we have paid in the past, can be restricted by the application of treaties. Interestingly, this issue started with filings before the authority for advance ruling. But once that became dysfunctional, then attempts were made to raise this as additional grounds in pending disputes. And that moved up. Some rulings have come in favor. In Total Oil's case in Bombay, that the correctness of the ruling was doubted. And therefore, that got pushed to a special bench in Bombay, where the hearings have been completed about a week or 10 days back. And the orders are awaited on this. Now, Mukesh touched upon software royalty issue being settled. But I did see the review petition being filed by the revenue. And normally what happens is if the review petitions are considered in the chamber by the judges, and then 90% of the times we have seen review petitions being dismissed. In this case, they have agreed that the review petition will be heard in the court. So I'm keeping my fingers crossed that the review petition will be dismissed. Otherwise, we are in for a big trouble. And lastly, the equipment royalty issue is also there. Equipment royalty issue is a big issue again when it comes to a lot of online payment companies. For example, all the major companies which have online presence on online payments. Revenue's allegation is that the payment is for use of equipment and therefore should be construed as royalty. Similar issues you will find, resonating even in some principles resonate even in hiring of equipment, hiring of ships and stuff like that. So this matter is now before the Supreme Court. Delhi High Court has been in favor. Generally, the north of India has been in favor. In the south, you have in Bangalore, there is a negative ruling. And that ruling is now being argued before the Karnataka High Court. But broadly, the issues are well crystallized and the decision can come up anytime soon. These are the issues with the cusp of resolution. We'll just quickly see the issues which are emerging issues. Secondment, I talked to you about the re-emergence of this issue because of the Northern Operating System. Digital PE taxation is a very large issue that is going to occupy the space in very many ways. I'll give you a very short flavor of this, especially with the data localization laws and the RBI dictates around having servers in India. A lot of global corporations have started having digital presence in India through servers. The servers, if they are directly held by the foreign company, generally, if they are capable, if they have the capability, they will be construed as digital presence of the foreign enterprise. They will be construed as having a PE. But the issues are becoming much larger when group companies end up holding those servers, those assets, etc. The question that arises is that the foreign company does not own those assets directly. So it's only the local Indian company. They are rendering the services of holding on to those assets, maintenance, etc., etc. So whether that can be construed as a presence of the foreign enterprise, even though you don't have a legal right, is this a customary access right? These are issues which are getting crystallized as we speak. This will become a large issue. Along with that, on all the digital side, some new aspects which I anticipate to come up are issues around the evidence law. For example, let's take a simple case. Today, Supreme Court has settled the position that human intervention is needed for a service to become a fees for technical services. Automated services are outside the scope. So you will claim that this is an automated service outside the scope of fees for technical services. But if the tax officer is asking you to prove that it's an automated service, completely automated, how do you prove it? Because these services may be happening outside India. The methodology of augmenting evidence, which law will apply, which country's law will apply in depot. For example, I want to depose an expert witness. Which country's law will apply in terms of deposing a witness? How will I let in the evidence? How will I bring in an expert and depose? Before the tribunal, can I bring in these kind of experts? Expert evidence is going to be a very big area going forward, in my view, especially when it comes to digital side of things. For instance, as we speak, again, information technology law has certain clauses, and that are also getting reflected in some of the decisions in the income tax. For example, if there is a survey and there is a seizure of digital information, there is a methodology under the Information Technology Act. Certain provisions will apply for validating it. If that has failed, then it lacks evidentiary value. So there will be issues around this. There will be issues around foreign evidence, foreign experts being used in India. Those kind of newer generation issues will come up. Next thing is beneficial ownership, which is a big thing. For so many years, from 96, 97 upwards, till the law changed on dividends, we were used to paying only DDT. So nobody cared about the intermediate holding jurisdiction, which is receiving money, whether it is the beneficial owner of money or not. Nobody cared. But suddenly, with the regime having shifted, companies are declaring dividends, which goes to intermediate jurisdictions. That intermediate jurisdiction gets the money and immediately passes it on to some other group entity. Beneficial ownership as a concept you will find under the treaties, and the treaties will narrate that you must demonstrate dominion over the income, dominion over the money as a owner of the money. So if you are just a conduit, when dividends come and you get the money and pass it on to the other someone else, then that treaty may not apply, right? So this, for the first time, India will be tested for all the holding jurisdictions, because for the reason that I told you, because of DDT, we never cared about this. We have to now care about this. A lot of documentation will happen around this issue. Similarly, MLI is in the same line. I don't want to spend time. GAR, we have talked about GAR. Even before advent of GAR, interestingly, if you see, treaty denial has again resurfaced, even in Mauritius context. Quite a bit of action on the Mauritius fund issues. Adjustments are again being made. You had Azadi Bachao Andolan coming out clearly. Then came Vodafone. Now, apparently, the government seems to think that there are certain paragraphs in the Vodafone ruling. Please go back and read paragraph 98 to 102 of the Vodafone ruling. Government's thinking is that these are giving us a way to now start arguing these Mauritius issues all over again. And we are seeing a spate of such notices being issued, adjustments being done, questions around, enormous amount of questions being asked around substance in Mauritius. Who is the director? How many companies is he a director of? Who is the decision making? Signatory for bank accounts, employees, their educational qualification. So many things are being asked about. Again, challenges coming. Similarly, you see certain treaties like Ireland, which is a hub for hiring of aircrafts. Belgium, hub for hiring of ships. All of those treaties coming under stress again, even without GAR. Now add GAR to it, you have a massive amount of disputes which are going to be there. 115 BAB, though it is domestic issue, I just want to touch upon it. A lot of companies have looked at how their new investments will go into a new company so that the 15% regime can be taken. But this 15, the one complexity which comes in is how independent is that company? What is the umbilical cord relationship between that company set up and the existing parent entity? What are the interfaces? Those issues are also likely to come up in our view, because this law has the language of restructuring of an existing business, which is the same language which was in 10A. Lot of litigation happened in 10A, 10AA and all that. So we do expect something around this happening as well. Corporate restructuring is an area which the government has now started realizing how large is it in terms of, it's a fertile area for revenue augmentation for them. They believe that corporate structures are put in place for a certain mischief only. Right? They don't believe that there is anything other than mischief. Obviously, there is honest restructuring that happens. But they have started looking at it in a very colored way. In the past, when in our interactions, I have found that tax department honestly was not completely up to date on the nuances of mergers, demergers, slump sale, etc., etc. But in the last few years, they've gotten their act together. There's a lot of focus on some of these areas. Faceless assessment has helped them in significant way in this, because I see in the second round of faceless assessments, the quality of write-ups which come from the department has gone up significantly. So they have their technical teams writing out pretty standard, answers, or for issues they are writing out pretty standard responses, and I see the quality has gone up. So I do also crystal ball gaze that significant amount of dispute will arise in corporate restructuring, in my view. And a lot of notionality issues will come up. I'm going to the next slide, and then I will wrap it up with about 5-10 minutes of the last slide. Angel tax, which all of you know, when there is a super premium received by the Indian company, there is supposed to be tax. And that super premium tax protected any investment from non-resident in the past, but this budget unravels that. So they are now saying that even if the money comes from a non-resident, it will be subject to super premium tax. What it does is it opens up enormous FDIs which are coming in for scrutiny. And all of these, imagine there's a lot of clients of yours, or your company may be structured with a foreign direct investment, and these are related party transactions. Now, even imagine from in the past, this was not even under scrutiny. Now it will come under scrutiny, and it will also be construed as a related party transaction, because it's an investment coming from your global parent. You'll have to now, and this can create an income. In the past, you would say transfer pricing does not apply because it does not have any impact on income. But now transfer pricing can also apply. So it is going to now create a lot of compliance around this issue, plus a lot of scrutiny around this issue. And also I see a host of valuation related problems coming up, 56 to all the notionalities. You have 56 to 10, 56 to 7A in the past, 56 to 10 I told you about. Yeah, all of those things, 50CA, all of this has notionalities built in. These notionalities are being routinely challenged. One other thing which you have to bear in mind, tax office looks at valuation reports in hindsight, compares your projections 2-3 years later with the actuals, and cases are being constructed. Of course, you have jurisprudence coming out to protect you on that you can't have that hindsight view, but these are tribunal rulings. So this is one becoming a big area. Secondly, they are looking at scope exclusions or caveats which are standardly put in by chartered accountants to say that, okay, this piece of paper is worth nothing because your chartered accountant has caveated out pretty much everything. So we can't take this. But you have to be mindful of this. The Institute of Chartered Accountants have prescriptive guidelines for chartered accountants to call out some of the caveats. So it is not, and therefore every valuation report in the country will have those caveats. And that doesn't mean those valuation reports are not worth anything. So we'll have to marshal these arguments, but these are matters of fertile area of litigation. Similarly, in reverse charge, I just want to touch upon the creativity of the tax department. For the foreign direct investments, apparently in the jurisdiction of Bangalore, lot of notices have come out now saying that this is a service of financing by the foreign parent to the Indian company. For that service, you'll have to pay reverse tax GST. Right? FDI being taxed in this manner through a reverse charge mechanism. You have seen notices of this nature in Bangalore now. The other big thing on the GST is because of this tribunal not being set up, everything is sort of stuck somewhere. Either the High Court or you're not filed an appeal. Now the government says tribunal will be set up this year. I don't have a hope this year, but maybe I'll be hopeful for the next year. But if it was to be set up and all these cases just go to the tribunal, tribunal has a condition there is a pre-deposit. 20% pre-deposit, 20% is my recollection, 20% pre-deposit. It's going to be a big cash flow impact, especially on large matters. So now the issues will be, can I challenge this? Can I reduce this? It used to be there in the VAT regime. The pre-deposits were being challenged and things like that. Those things may come back here as well. Lot of issues under dispute on customs classification as we speak. And also transfer pricing orders, if any, are being looked at by customs. Customs SVB orders are being looked at by transfer pricing authorities. That interface is also going on. The other thing which I expect to be big time challenge is the new trend of delegation of legislative powers. If you see all these new provisions of 194R, O, etc., you see that the law itself says if there is difficulty, then this notification will be issued by CBDT, and that will be placed before the government, and that is binding. It will be placed before the parliament, and it will become binding. Now, this is a new animal that we are dealing with, if the recent origin, saying that all difficulties you will deal with through notifications. But this is law, right? Lawmaking to being delegated, and then the CBDT will come up with notifications which are interpretative. It is not to put to rest any difficulty. It is new interpretation, and a lot of those interpretations have been in favor of the tax department. Now, is this lawmaking or not? Will be a next big wave of disputes which will happen. The amendment in section 245(2) of the proposed by the new budget of holding back on refunds. If the assessing officer believes that there is going to be an assessment in the future where there will be a tax demand, I can hold back the refunds given, then it means holding back money in perpetuity is the fear of the corporates, because any large corporate will have successively assessments being open. And if the tax officer were to pass an order saying that I will hold back, that will result in a spate of writ petitions. Then exit charge issues, functional changes. If you are particularly set up in a certain functional way, and if those functions change, if your functions reduce, automatically your profits will drop. So there are now a lot of focus on exit charge, whether the exit charge will apply. Is there a business restructuring under transfer pricing provisions? Should there be a charge which is to be levied for this purpose? These are, again, all of these are new generation issues. And I've just put a few. We have far more number of issues, but these are definitely going to occupy the dispute space. Now, in the holistic picture that you have, first slide, we saw the heightened action, the government's action, coordination, forensic capabilities on all that we saw. The next slide, we saw the creaking dispute resolution. And the next, we saw a fairly robust functioning alternative dispute resolution. And then you saw issues which are coming to an end and absolutely new issues coming to the fore. Now, whether these kind of complex issues like GAR and digital PE, foreign evidences, how capable is the existing dispute resolution system to solve this? Right? It's an elephant in the room. All of us pretty much know the issue. Right? How are we going to resolve it unless there is a large scale reformation which are likely to come? Now, what could really happen? I mean, there are no easy answers to this. It could be combined several steps. For example, an effective alternative mechanism like an advance ruling, in my view, is an absolute must. In my view, bar should not be there. It should be an AAR. AAR should be probably manned by tribunal members or tribunal-like members if high court judges are difficult to get by. You start with a lofty position of wanting a high court, Supreme Court judge. If that's not available, directly making it a revenue-centered body, you can have a via media. And that via media will augur extremely well for dispute resolution avoidance, right? Because you are getting verdicts earlier. You need more advanced ruling boards like it is there in GST, but GST also is a revenue body. If we can achieve neutral bodies like tribunals, which is why I thought of tribunals, because tribunals functions in about 30 locations, right? Why can't we make tribunal give dispute resolution and also advanced ruling? Same subject matter. Why do we need another forum? We could have probably easily solved this. This is one thought. Adding scale to the good APA work. Now, 62 agreements being signed out of 700 pending does not inspire confidence on speed. It inspires confidence on quality, but not on speed. So you need work there to deepen this. Monetary thresholds have to be significantly increased for GAR. Like I already talked about, 3 crores will just flood more, open floodgates of more litigation, and we will not be able to handle all that. Avoidance of repetitive appeals. You have a provision for it already in the law, but they have now created a concept called collegium of government bodies, which will decide whether they don't want to appeal on a particular matter. They will then, if a earlier appeal gets decided in the assessee's own case, it will get applied to you, which is not effective. The trigger has to be with the taxpayer. Lot of work should be done in this space of avoidance of repetitive appeals. Permanent settlement scheme. I want to briefly dwell on it. VSV scheme, in the VSV, we saw about 120,000 applicants apply, and about give or take about, I thought 950 crores or so were settled, is my recollection. Similarly, in the indirect tax side also, there was significant takers who applied for it. Why not make this as a permanent solution, permanent scheme which is in place? But that permanent scheme also has a little bit of an issue. In the schemes which came in, you settle all the issues of 1 year or you don't go in at all. But that is not what the corporate world wants. That's not what the international community wants. If I have 5-6 adjustments, 4 of which are frivolous, I should still have the ability to settle those 4 issues without any serious consequences. Only those 2 issues I should be allowed to litigate, which has serious consequences, which will also bring down the workload of the judiciary. So there must be a permanent scheme which is flexible enough, is my thought. Speeding up constitutions like GST, filling up vacancies. There have always been friction on filling up vacancies between the government and the judiciary. Adoption of technology. E-courts. I was heartened to see the statement of the Chief Justice to say that e-courts are mandatory. It is not for any Chief Justice or tribunal members to decide that I will not have e-courts. In fact, he said that I'm going to pass an order on this issue itself. So e-courts will significantly bring in efficiency, avoid unnecessary travel, digitization of records. We are filing thousands and thousands of paper books every day. Environment also, we are looking at 2070 zero carbon. So this is not the way to go. My small measure is, at least I argue cases now without prints. Now, in the last 8 months or so, I don't print at all. Whether it is a case having hundreds of crores, I still have organized my affairs that I argue only digitally. I don't see why that can't be done in an en masse scale. It is simply possible. I think mind over matters. Specialized benches are needed for tax cases, because the specialization is far too much in this. Even in the high courts, while we have tax benches, I mean, making a statement, I don't know whether it's feasible. Can there be specialized judges for it? Is that even a possibility? It's a politically difficult one. I see Karthik here. He will probably have a view on specialized judges for tax matters. Difficult is what I'm thinking. Maybe he will have a view. On the sidelines, we can discuss perhaps. And I was also heartened to see Supreme Court taking steps on artificial intelligence. They have now nominated the Constitution Court, where there is going to be a transcription of the arguments. So AI-based transcription of arguments, which will be available as a trail. Anyone can read through constitutional bench discourses. It's a learning thing. And it is a right way to go towards the future. And also, there is an AI committee formed by the Supreme Court. They have come out with tools called Suhas and Supes. Suhas is a tool which allows translation of an order from English to about 17 vernacular languages and vice versa. So those kind of tools are now coming up. All of this does not take away the pendency. Right? In some measures, you instill and inject efficiency in different ways so that we can get to where we want to go. Avoidance through advanced mechanisms, APAs, resolutions through MAPs, and increasing the thresholds for various things like GAR and stuff like that, so that we have lower number of cases come up, and bring in all these, tech-based efficiencies, so that we can go to a stage where dispute resolution is not going to be a painful affair anymore. So these are some of the thoughts that I had. I thought I will share with this August gathering, and happy for this opportunity. Thank you so much.